Okay, so let's proceed with compound financial instrument. Before we discuss compound financial instrument, let's discuss first what is a financial instrument. So, what is a financial instrument? Okay, so according to past 32, financial instrument defines a financial instrument as any contract. So, it's a contract that gives rise to both a financial asset, so contract that gives rise to a financial asset, of one entity and a financial liability or equity instrument of another entity. So it's a contract between parties in which, di ba, one of the party has a financial asset and the other party take care of financial liability or equity instrument. Okay. So financial instrument is a contract between parties in which one of the party incurred a financial asset or recorded a financial asset and the other party incurred a financial liability or equity instrument. Okay, so the contract shall give rise to a financial asset of one party and financial liability or equity instrument of another party. Therefore, there must be two parties involved. There must be a contract between the parties. Tapos one of the party will recognize a financial asset and the other party will recognize financial liability or equity instrument. So if kulang, 'di ba? Walay financial asset sa isa ka party, there's no financial liability on the other party. Therefore, that instrument is not a financial instrument. Okay, so these are the examples of financial instrument. So, cash in the form of notes and coins, you have cash in the form of checks, cash in bank. So, let's move on with the examples sa notes and loans. 'Di ba? Notes, receivable, payable, or loan receivable or payable is an example of financial instrument. Why? Diba? There's a contract between the parties. Na by contract, if there's note na ay loan receivable or payable, yes, diba, na ay contract between the parties. Let's say, for example, for the entity X and say bank, it's a loan transaction. Okay, so the loan transaction, loan is if loan receivable or loan payable is a financial instrument. Why? Because, diba, there's a contract between the parties, between entity X and entity bank. Second characteristics is, again, there are two parties and for the other party, dapat nasa financial asset. So, yung say financial asset, nasa contractual right to receive cash. Okay, contractual right to receive cash. Okay, in this case, since let's say nangutang si entity X kang bank, okay, si bank has the contractual right to receive cash from entity X. So therefore, si bank mag-record siya og, let's say, financial asset, loan receivable. On the part of the entity X, okay, naasay financial liability. Because why? Because si entity X has the contractual right to pay sum of money to the bank. So therefore, naay liability on the part of entity X and there's a financial asset on the part of the bank nga nag-grant sa loan because the bank has the right to receive cash from the entity X. Okay, another example, you have debt securities, diba? This is a financial asset of the investor and a financial liability of the issuer. You have equity securities, this is a financial asset of the investor and equity of the issuer. So our focus here, dito sa debt securities because, diba, debt securities, this is a financial asset on the part of the investor, mo niya kong gingon, diba? Sa bonds, investor and issuer. So asset, this is financial asset on the part of the investor, and financial liability on the part of the issuer or the borrower. So our focus now is we are on the part of or the perspective of the issuer or the borrower. Okay, so our focus now is about financial liability because we are done with asset. Financial liability. So this is any liability that is contractual obligation. You have the obligation based on contract to deliver cash or other financial asset to another entity. So you have the liability, you have a contractual obligation to pay cash or deliver other financial asset to another entity. Next is to exchange financial instrument with another entity under conditions that are potentially unfavorable. So that's the definition of financial liability. Examples of financial liabilities, trade accounts payable. Siyempre, if we are the customer, we purchase supplies from the supplier. So by that transaction, diba, we record accounts payable. So on our part, we have the contractual obligation to pay our supplier. Notes payable. So it's same, diba? So it's a utang transaction but with a promissory note, supported by a promissory note. Loans payable, normally this is transaction with financial institutions. So nangutang ta sa financial institutions, banks, lending corporations, companies, di ba? So by doing the utang, so we incur liability on those financial institutions. Okay, so another example is the bonds payable. So again, as illustrated kagaina, so bonds payable, so we are on the perspective of the issuer of the bonds. Okay, so let's discuss compound financial instrument. Diba from the word itself, compound. Compound financial instrument. So, according to PAS 32, compound financial instrument, it defines a compound financial instrument as a financial instrument that contains both a liability and equity element from the perspective of the issuer. On our perspective as a issuer, compound financial instrument is composed of both liability, financial liability, and equity instrument. Di ba ganun gitawag sa compound because kani nga instrument, kani nga financial instrument on our part as issuer na ay person na financial liability at the same time there's portion of it na equity instrument siya. That's why it's called compound financial instrument. In other words, one component of the financial instruments meets the definition of a financial liability and the other component meets the definition of equity instrument. So this instrument, compound instrument, so it composed of two instruments. You have the financial liability and equity instrument. Okay, so what are the common example of compound financial instruments? So we have two common examples. One is bonds payable issued with share warrants. Sir, unsa nang share warrants? Share warrants, aside sa nag-issue ta og bonds to the investor para maging attractive yung ang atong bonds para dagan mo palit sa bonds nato is normally companies ginaapilan nila og share warrants. Sir, what is share warrants? Kanang share warrants pwede na gamiton sa ni investor or ni holder of the instrument para mo palit og shares sa atong company. Diba? This can be converted or this can be exercised, diba, to purchase shares from the company sa ato as issuer. Okay, so we also have another example is convertible bonds payable. Diba? From the word itself, convertible bonds payable. These bonds payable can be converted into shares. Pwede gamiton ni holder or ni investor Especially if ang iyang gi-purchase sa ato, ang atong gi-issue is a convertible bonds. So, pwede niya i-convert ang bonds payable to equity, to shares. Okay. Kani, naay bonds plus naay shares. So, pwede nimo gamiton ang katong warrants to purchase shares of the, pwede gamiton ni holder ang warrants to purchase shares sa atong company as the issuer. Convertible bonds po, i-convert lang ang katong bonds payable nga atong gi-issue kang investor. So how do we account compound instrument? Diba? How do we account these two, bonds payable with share warrants and the convertible bonds payable? So let's start first with bonds payable with share warrants. So again, aside from the bonds payable issued, nag-issue po ta og share warrants which can be used by the holder of the instrument to convert or to acquire shares on our company, the company of the issuer. So, the issuer of financial instrument shall evaluate the terms of the instrument whether it contains both a liability and equity component. So, how do we account? So, normally we account the financial liability and the equity instrument separately. It's accounted separately. Or natagitawag na split accounting. Because again, it's a compound financial instrument. Again, we need to identify how much is the financial liability and how much is the equity instrument for that certain financial instrument, compound instrument. Okay, so how do we compute? How do we allocate the issue price, or how do we allocate or how do we compute for the liability component and the equity component? Okay, so normally, based on the definition, di ba, this is a financial liability and this is the equity instrument. Based on the definition of equity instrument, di ba, so we have our basic accounting equation, asset equals liabilities plus owner's equity. Or if we derive this one to compute the owner's equity, that's asset minus liability, that is owner's equity. Therefore, the definition of equity, it's a residual amount. So, si residual amount, di ba? So, if napay nabilin sa imong asset after deducting all liabilities, that is your equity. Okay, so in allocating the or computing the financial liability and equity instrument in a compound financial instrument, so we need first to compute the value of your financial liability. Okay, so this is how you compute the issue price. Okay, how do we allocate the issue price? So, kanang issue price nimo will be allocated to your financial liability first, and then the balance will be your equity instrument. Okay, so we need to compute first the financial liability because again, by definition of equity, it's a residual amount. So once you have the issue price, deduct the financial liability, then that's the time you can compute the equity instrument or the equity component of your compound financial instrument. So how do we compute the amount here sa financial liability? Diba? Normally, financial liability, this refers to your bonds payable because this with share warrants bonds payable. So financial liability bonds payable is computed or measured at fair value. Diba? At fair value, so this should be computed at market value or fair value without the share warrants, of course. So to compute the financial liability component or the liability component, we need to compute the market value or fair value of the liability component or the bonds payable without the share warrants. Because the total issue price, kaning total issue price ato dire, appeal na ang share warrant sana. That's why atong gi-allocate. Gibungkag nato pila ang financial liability component, pila ang equity component. So your financial liability is equal to the market value or fair value without the share warrants. Okay, normally sa problem ihatag, let's say naigihatag diretso fair value, market value, mas maayo because di ba di na ta mo compute pa. Because given na, directly given ang information, directly given ang market value or fair value sa bonds payable without share warrants. But how about if dili sa given directly? Diba? Wala gihatag directly ang fair value or market value sa share warrants sa bonds without the share warrants. So that's the time we need to compute again the present value. The present value of your bonds. Okay, diba? To compute the present value, that's principal. Normally, that's principal times PV of ordinary annuity of 1 dili dapat PV of 1 ni. Okay, principal times PV of 1, then the interest is multiplied by your PV, present value of ordinary annuity of 1. But to compute the present value of the bonds. Okay, so principal times PV of 1 and interest times present value of ordinary annuity of 1. So how do we compute the present values? Diba kaning PV of 1, PV of ordinary annuity of 1. Diba we have formula. So PV of 1, that's 1 plus effective interest rate raised to negative n. That is your PV of 1. How about the PV of ordinary annuity of 1? That's 1 minus 1 plus effective interest rate divide n over I, interest rate. So that's PV of ordinary annuity of 1. So again, I is your effective effective rate, dili ang nominal. That's effective rate. Ang N pod nimo is the number of interest payments. Number of interest payments. Because diba, some of the problems naka-annually, naka-semi-annually, or naka-quarterly. So you need to update the N based on the number of interest payments. Especially if naka-semi-annual, let's say 5 years, so since semi-annual, 10 in N. The same time, your effective interest rate, you need to adjust because normally, the effective interest rate given in the problem is annual rate. Okay, mana yung bantayan to compute for the present value. So this is how we compute the financial liability component or the liability component if dili given ang market value, fair value without the share warrants option. Okay, so once you can compute the financial liability automatic, okay, you can compute the equity instrument, equity component because it's a residual amount. You just deduct pilay na bilin sa issue price nimo after deducting the liability component, the fair value, market value, or present value of the liability component. Okay, so ang may tama po dana, since the holder has the right to issue shares or to exercise the warrants, share warrants, diba, gamiton ni holder para mupalit sa og shares sa corporation. So let's just look on the illustration sa libro, diba? So nasa example dire of transactions about bonds payable with share warrants, issued with share warrants. So here, based on the illustration, the first illustration, you have an entity issued 5,000 10-year bonds, face amount 1,000 peso per bond at 105. Okay, so naatay gi-issue as the issuer, we issued 5,000 10-year bonds. Tapos ang face amount niya is 1,000 per bond, pesos per bond at 105. Each bond is accompanied by one warrant. So therefore, kaning kada isa ka bond, 5,000 bonds, nada na say isa ka warrant. Okay, issued by one warrant that permits the bondholder to purchase 20 equity shares. Therefore, times naa siya isa ka warrants, so naatay 5,000 share warrants na pwede gamiton i-exercise ni holder to convert or to acquire shares sa corporation nato as issuer. Tapos kanang per warrant, each warrant daw pwede gamiton ni holder to purchase 20 shares. Therefore, kung atong i-compute pila ang pwede paliton tanan ni holder sa nga shares sa atong corporation, so moabot siya pwede sa mo exercise og 100,000 shares. Okay, so mo na maximum pwede mapalit niya ni holder sa atong corporation. Okay, so the market value daw of the bond X warrant at the time of issuance is 98. Kani given, di ba? Given ang market value. So market value sa bond X warrant, again without the warrants, is 98 daw. So based on our formula kagaina, di ba? So question karon, pila ang liability component, pila ang equity component, because the instrument na atong gi-issue is a compound financial instrument. Why? Because we don't only issue the bonds, but nasay appeal share warrants. Diba? So, share warrants, it's an equity component. So, we need to allocate, identify pila ang liability ani, pila ang equity ani. So, how do we allocate? So, you have the issue price. How much is the issue price? How much is the issue price? Hindi problem. $5,250,000. Okay, that's 5,250,000. So, you have 5,000 bonds. Tapos, tag 1,000 per bond. Gi-issue siya at 105. Diba? So, the issue price is 5,000 bonds times 1,000 per bond times issue price of 1.05. That's 1.05 ha. So that is 5 million times 5,000 times 1,000 times 1.05. So that is 5,250,000. That's how you compute the issue price. Okay. So next sa buhaton, identify pila ang liability component. So liability. Pila yung liability ani. So since given na ang market value niya nga X warrant, pila to 98. So that's 5 million face amount of the bond. That's 5,000 times 1,000 times 0.98. Therefore, our financial liability component or the liability component of the compound instrument is equal to 4,900,000. So therefore, the balance, the residual balance is your equity component. So that's 5,250 minus 49, that's 350,000. Okay, what is the journal entry, 'di ba? Upon issuance. Issuance of the bonds. Journal entry upon issuance of the bonds. Siyempre, nag-issue ta og bonds. Pila tong na-receive nga price? Total issue price of 5,250,000. Sa pa atong debit. Diba? Debit cash 5,250 equal to the issue price discount. Yan na may discount. Anong na-discount? Diba? Hagi ka ng discount. Kaya ang bonds payable is 5 million raman. Yes, sa bonds ang discount because kay sobra ang residual kontra sa premium. Wala pa tay premium gistoryahan dire, sobra ang residual kontra sa premium. Ang fair value sir kay gamay. Sa ganito, kanos anay discount, kanos anay premium if the initial measurement there is discount if the initial measurement is lower than your face amount. 'Di ba? Lower ang initial measurement sa imong face amount. Naay premium if mas dako ang initial measurement kaysa sa imong face amount. So ang inyo ninyo gay na naay discount. Kaya nganong naay discount? So pasabot ba nga lower ang iyang initial measurement sa iyang face amount? Lower ba sa problem? Lower ba ang initial measurement kaysa sa face amount? Yes, lower. Okay. Pila dayang initial measurement? Okay. Diba? The initial measurement is 4,900,000 compared to the pilay face amount 4,900,000. The face amount is 5 million. Therefore, mas lower ang initial measurement compared to the face amount. Pilay lower ani, this is 100,000. Therefore, we have a discount on bonds payable of 100,000. Then, we credit the bonds payable at face amount 5 million. Then, the residual balance is the equity component. So, you have the share warrants outstanding, 350,000. Okay, that is the entry. Okay. So, what if, diba, what if after, let's say, months, kanilabay, or years, ga-exercise ni holder ang iyang warrants. Iyang gi-convert into shares. Okay, so let's say sa illustration, 60% of the warrants, diba, were exercised. So gi-exercise siya 60% lang. Pila ganito yung maximum pwede ma-convert? 100,000 shares, diba? So since 60% ra iyang gi-exercise, so pila ra iyang na-convert? 60,000 shares lang pod. Iyang gi-pa-convert. So may tabo. So since ang imong share warrants is 350, this equal to 100,000 pod na share warrants, pero 60% ra atong gi-exercise, unsa to buhaton? So unsa entry nato upon exercise of the share warrant. So siyempre gigamit man nato ang share warrants atong i-debit. Share warrants outstanding at 60% lang. So, that's 350 times 60%. Okay, that's 210,000. Siyempre, naay conversion, di ba? Naay issuance of share. So, your corporation accounting, di ba? So, we debit share capital. Pila ra ka shares iyang gi-exercise? So, 60,000 shares times pila ang par value. The par value of the share is at 50 pesos. So, that's 60,000 times 50. You have 3 million. Upon issuance of the shares, pilay presyo sa kada share nato. Diba? Pilay presyo sa atong shares. So we have tagpila per share, di ba? At par 50 pesos, pero pag atong ibaligya, di ba? So tag 55 per share. So makadawat tag 55 pesos per share nga atong gi-issue. So that's 60,000 times syempre cash na, di ba? Kaya atong gi-issue. So that's 60,000 shares times tag 55 pesos per share. So naatay na dawat na 3,300,000 upon issuance of the share. So kulang pa atong entry, di ba? So kulang pa ta og credit. So unsa atong account to be used for the balance for the residual amount. So we use the account share premium from issuance. Pwede ra pod share premium. Okay, the balance 3,300,000 plus 210. Okay, minus 3 million. So you have share premium of 510,000. Okay. So since 60% lang ang gi-exercise ni holder, unsay mahitabo sa 40% nga balancer? Okay, what will happen to the share warrants outstanding 40% balance? So unsay button nato? So if it will be expired, di ba, wala nagigamit, wala nag-exercise ni holder because siguro wala na sa enough cash to purchase the share. Okay, mura ang warrants mura lang sa right to purchase the shares. Pero dili pasabot na kung mo-purchase si holder, libre wa si bayaran, di ba? Nagya po'y bayaran si holder, na lang si right to purchase. Okay. So since the 40% wala gigamit, so let's assume nga na expire siya. So what will happen to the 40% balance? So ato sang i-close to your share premium account. So atong i-zero out ang share warrants outstanding, pilay balance ato 350 times 40%. That's 140,000. Close to your share premium. Okay, specific yung gigamit, unexercised warrants. Okay, still, it is presented in your shareholders equity account. Diba? Share premium. This is still part of the shareholders equity account. Okay, question for bonds payable with share warrants. Medyo dili kayo complicated ang bonds payable with share warrants compared to convertible bonds. Question. Before we proceed with convertible bonds, second type of compound financial instrument. Wala question? Sure ha? Clear ba? Clear ba ang bonds with share warrants? If premium sir, same lang gihapon. Yes, same lang gihapon ang premium. Lahi lang ang entries nimo, di ba? Ang debit o credit nimo. So same lang gihapon if naka-premium siya. Okay, sige. Let's continue to convertible bonds. Okay, the second type of compound financial instrument is convertible bonds. Diba? Aside sa it's a liability because it's a bonds payable, diba? Nasa feature nga pwede sa i-convert ni holder. Before we proceed, sir, pwede mag-ask sa gikan ng 60% sa it's an assumption sa problem na 60% lang ang gi-exercise ni holder. Diba? Kay siguro, dili enough ang cash niya or 60% lagi diyang gusto exercise. So, assumption lang to sa problem. Assumption to. Okay, so again, convertible bonds payable. So, another type of compound financial instrument. So, aside it's a bonds payable, it's a liability, nasa feature na pwede sa i-convert into equity instrument. So, if bonds are converted into share capital of the issuing entity, so the accounting problem is the determination of a value to be assigned to the share capital issued. So, normally, what is the accounting procedure, di ba, for convertible bonds payable? So, first is you have so, yung sa dire, the carrying amount of the bonds is the measure of the share capital issued because the carrying amount is the effective price for the shares issued as a result of the conversion. So, according to PAS 32, there is no gain or loss on conversion at maturity. So, if the bonds were converted at maturity date, diba, gi-convert mo sa at maturity date, so there is no gain or loss on conversion. But if you convert, or let's say gi-convert nimo ang bonds or imong gibayaran ang bonds in between the maturity date or prior to maturity date, okay, pwede ta mo recognize o gain or loss on extinguishment. Okay, so here, the accounting procedure, the amortization, so since it's a bonds payable, so the amortization of discount and issue cost or premium up to date of conversion shall be recorded. So before we convert the bonds payable, we need to update the carrying amount of the bonds payable. Same bitaw sa katong retirement of the bonds payable, di ba? Before we retire, we need to update pila ang carrying amount at the time of retirement. So same here, we need to compute the carrying amount or update the carrying amount at the date of conversion. Okay, so the face amount of the bonds converted shall be cancelled together with the related unamortized premium or discount and issue cost. So If only portion of the bonds is converted, the unamortized premium or discount and issue cost balance shall be cancelled proportionately. Normally, conversion is at an interest date. So normally daw, gina-convert ang bonds on interest dates, payments, let's say annually, semi-annual. So dito sa gina-convert. But when at other dates, the accrued interest up to date of conversion is ordinarily paid. So normally, since if between interest dates nimo gi-convert ang bonds, of course, nagi accrued interest involved, di ba? Because wala pa nimo napay certain period nga na-accrue siya, wala pa nimo nabayaran because wala pa niabot ang interest payment dates niya. So you need to compute for the accrued interest, but normally it is paid at the time of conversion. Ginabayaran siya at the time of conversion. But if it is not paid at the time of the conversion, so we need to add the accrued interest in computation of the carrying amount of the bonds payable. Okay, so same with the bonds payable with share warrants, mora gyapon, you have the issue price, diba? How do we allocate the liability component and equity component? So issue price lang gyapon, same concept, compute first for the liability component, then the balance is your equity component. Okay, so inana lang siya sa convertible bonds. So, it's the same concept with bonds payable pero lahi lang because this is convertible sa nga bonds. Katong kagaina, bonds tapos na ay gi-appeal nga warrants. Okay, so kani ang bonds gid mismo imong i-convert. Kagaina, naa kay warrants but at the same time, we need to pay for the liability for the bonds payable. So here, as per illustration, di ba, on the sa book, kani equity component niya gitawag nato ni siyang share premium ba conversion privilege. Kagaina share warrants outstanding atong gamit. Okay, so as per illustration sa book, di ba? So you have statement of financial position showed the following. So you have the bonds payable. So you have bonds payable nga convertible at 12% interest rate, stated interest rate na 5 million. Tapos na premium. Premium of 200,000. Tapos na kay share capital, now 10 million. Kanang share capital nimo na ay par value nga 40 pesos. 40 par. Then na kay share premium from the original issuance niya, that's 3 million. And you have a share premium, okay, for conversion privilege. Kani ang given sa problem, computed dadaan ang liability component o equity component conversion privilege of 500,000. Okay, also indicated in the book if their costs incurred upon conversion, di ba? Any cost incurred in connection with the bond conversion shall be deducted from share premium or debited to share issue cost. So if naay mga expenses incurred, di ba? From the time nga gi-convert nato ang bonds to shares, so the cost incurred is credited to your share premium or to share issue cost nga account. Okay, so let's continue the illustration. So on the same date, the bonds are converted daw into share capital and the conversion ratio is 20 shares for each 1,000 bonds or a total of 100,000 shares. So kani imong bonds payable nga 5 million can be converted into 100,000 shares. So pwede siya ma-convert into 100,000 shares. Question na ho, dire. since you have a bonds payable with 12% nominal interest rate, okay, what do you think? The effective rate is lower or higher compared to the nominal rate? Diba? Kung tanaw ninyo ang given, 12% daw sa nga bonds payable, that's the nominal interest rate. So question, higher or lower ang effective interest rate? What do you think? Higher or lower? Lower, lower. Why? Why lower? Because, okay, there is premium. Okay, sige, that's correct, diba? Because there is premium, pasabot, the effective rate is lower than your nominal rate. So if na 12%, probably 10%, 11% ang imong effective rate. Okay, since the problem, wala naman tagi pa compute. So let's continue. So upon, in connection with the conversion, the company incurred 100,000 cost of conversion. And the accrued interest on the bonds payable on the date of conversion is 150,000, which is paid in cash. Okay. So unsay boto nato ani, di ba? Unsay approach nato ani? So first, we need to compute the total consideration. Di ba? Upon conversion, pilay total consideration nato. Di ba? Pag-convert nato sa bonds into shares. So our total consideration, this includes the face amount of your bonds payable. Okay, that includes the total consideration niya is carrying amount or the bonds payable at face amount. Let's say carrying amount sa bonds payable. Total consideration, that is bonds payable. Depende if there's premium or discount. Then you have the share premium conversion privilege. Then that is your total consideration. If you are going to convert the bonds payable. Okay, after computing the total consideration, so we need to deduct the par value of the share or the share capital. Okay, to compute the share premium. Pila sobra niya. Okay, based on the problem, we have a bonds payable of 5 million. We have premium of 200,000 and we have share premium conversion privilege of 500,000. Therefore, the total consideration for this illustration is 5,700,000. How about the par value of share capital? So since di-convert sa tanan, so that's 100,000 shares, di ba to ang maximum, times the par value of 40 pesos. So 100,000 shares times 40 pesos. So that equals to 4 million. So therefore, you have a par value of 4 million. So pinibilin sa imong share premium. So that's 1,700,000. Sir, so ano sa pag-entry? Okay, so let's prepare the journal entry for this transaction, di ba? Upon conversion, gi-convert nato siya into shares ang bonds. Siyempre, gi-convert nato ang bonds, tanggalon na nato ang bonds, di ba? Kay gi-share naman nato, gi-share na ni holder. Okay, so that's debit bonds payable at 5 million. Since it's a premium, so debit po tag premium because di ba add-on siya. Okay, premium. So based sa atong competition kagaina, di ba aton isang gi-convert into shares. So you have share capital. Let's close first the share premium conversion privilege because gigamit nato siya na, gi-convert na nato siya. So share premium conversion privilege, that is 500,000. Then you have the share capital of 4 million and you have share premium of 1,700,000. Okay, this is the entry for the conversion. So aside from the entry for the conversion, di ba, we have interest nga na-incur, di ba, upon conversion. So you have accrued interest on the bonds payable on the date of conversion is 150,000 which is paid in cash. So therefore, the accrued interest giapila to sa bayad upon conversion. So that's interest expense credit cash. So pila to, that's 150,000. Gitinamban lang nako niha pag entry. Then aside from this, di ba, we have incurred 100,000 transaction costs. Diba? So how do we record the transaction cost upon conversion? Diba? We credit it to your what? So you have transaction cost, 100,000. Diba? Dapat credited to your share premium. Dapat ani. Because gibayaran na nato siya. So the transaction cost is recorded or accounted to your share premium. So it's a deduction to your share premium from issuance. Then we pay for the transaction cost of 100,000. Okay. So this is how you journalize a transaction if it's a convertible bonds. Pero kani siya given na ang balances. 'Di ba? So what if the problem is nag-start let's say after 3 years pag i-convert. So sa first 3 years niya mag-record ya po tatong same sa bonds payable na paperta po tag amortization table. 'Di ba? So we amortize the discount or the premium. So record ya po tag interest expense, premium on bonds payable or debit interest expense, bonds payable, a discount on bonds payable. Okay, so that is how you account convertible bonds payable. So what if wala gi-exerciser? Diba? What if wala gi-exercise or wala gigamit ni holder ang iyang conversion privilege? Diba? So unsay may tabo? So siyempre magbayad ta. Since walay conversion na hitabo, bayaran nato ang liability. Diba? We need to pay the liability. So depende if at maturity na to bayaran, at maturity date or prior to maturity date. Okay, so let's say for example, payment of convertible bonds. So payment of convertible bonds at maturity. So since kani wala sa gi-exercise, ni holder iyang right para mo purchase og shares. So what I choice, we need to pay the holder at maturity date. Or if you will pay the holder, pwede po sa prior the maturity date. Okay, so if the conversion privilege is wala gi-exercise ni holder, diba? We need to pay for the liability. Sir, what will happen to the equity component nga share premium conversion privilege? At if wala na gigamit, diba? So, ato siyang i-close to your share premium original issuance account. So, since wala, let's say for example, wala ni gigamit ang pinagito equity component 500,000. Diba? So, nagbayad ta sa liability because wala man gi-convert ni holder. So, atong entry, so i-close na to sa share premium 100,000. So, ibalik ang share premium issuance. So, still part of the share premium. Lahat lang ang kanang specific account na iyang gigamit. Question. So again, di ba, if you pay the convertible bonds at maturity date, there is no gain or loss if you pay on maturity date. But what if you pay the convertible bonds before maturity? Diba? What if gibayaran nato before maturity? So, payment before maturity date. Diba? And it's a convertible bond. So, therefore, naga po part ato nga equity component niya. So, unsaon na to na siya? Diba? So, if we pay the convertible bonds before maturity date, pwede na atay i-record na gain or loss on extinguishment. Diba? How do we compute the gain or loss on extinguishment? Siyempre, pila atong gibayad sa liability, payment, equal to fair value or present value of bonds or market value of bonds without conversion privilege minus the carrying amount of the bonds payable. Okay, pwede siya gain or loss. Okay, this is how you compute gain or loss on extinguishment of the convertible bonds payable if ato sang gibayaran prior to maturity date. Again, prior to maturity date. Sir, saan man na, sir? So again, since, di ba, gibayaran na to, wala pa nebot iya maturity, we need to update pila ang carrying amount at the time of payment before the maturity date. So, money iyang carrying amount. Question, pilay dapat na to bayaran? Pilay the market value sa atong bayaran? Mao ni siya, payment equal to the fair value or market value of the bonds considering without the conversion privilege. Diba? Because it's a compound. So, since atong i-compute, ang liability man atong gibayaran, so specific lang pod sa liability atong gamiton nga amount dire. Question. Sige, kani. What if ang atong payment is 100, tapos ang carrying amount nato 90? Ginansa ta, lugi. Sige daw. Ginansa ta, lugi. Loss, loss, lugi, loss, gain, naay na gain, naay loss. Okay, the answer is loss. Nga naman, liability, di ba? Kitaan na liability, kitaan na utang. Pila tong gibayaran? 100. Pero pila ra dayta ang value or carrying amount sa atong liability? 90 ra. So lugi ta, di ba? Because 90 ra dapat atong bayaran. Let's say 90 ra ang carrying amount sa atong liability, pero atong gibayad is 100 pesos. So it's a loss on our part. Pero what if kung baliktad, 90 atong gibayad, ang carrying amount 100, gain na sa atong part. Di ba? Nakatipid ta. Instead nga 100 atong bayaran, 90 atong gibayad. So may bantayan kung na mga problems, tanawon ninyo kinsa nga perspective. Kay kung sa investor ka nga perspective, baliktad pod siya, di ba? Kung kita investor, 100 atong nadawat, 90 atong dapat dawaton, gain sa atong apart as investor. But on the part of the issuer, that's loss on the part of the issuer kay sobra yang gibayaran kaysa sa dapat niya bayaran or kaysa sa carrying amount sa iyang bonds payable. So muna inyong bantayan sa problem. Kay pwede man na magsagol ang problem, di ba? Pag answer ninyo, kinsa mga perspective, investor ko or ako ang nag-issue sa bonds. Okay, so muna inyong bantayan, ha? Kay labi na pag mangutana gain or loss, try to check kinsa ka nga perspective. Na baka kang holder or na baka kang kang issuer. Question. Question. Sir, kung loss on sa man entry, sir. Loss on extinguishment. So, di ba, mamani, ato namang gibayaran ng utang. Let's say, bonds payable. Assumption lang niya, tapos na ay premium. Sige, gamitin na to itong kan. Tapos, loss man to no. So, let's say, since it's a loss, ito ng ilisan dire. Loss man, so 5.2. Let's say this is 5,500,000 tapos 5.2. So natay loss na 300,000. If kinanila ang problema, so like bonds payable 5 million, premium 200,000 tapos nagbayad ta, pila tong gibayad 5,500,000. Therefore, man is dire loss on extinguishment 300,000. Di ba gansi tag 300,000 na siya. Sir, unsay nakalay sa conversion option o conversion privilege? Kaning conversion option man itong share warrants. Mo ba ning share warrants imong pasabot katong conversion option? Conversion privilege. Itong share warrants option or share warrants outstanding. Sa man ang unsay kalahian sa conversion option o conversion privilege? Unsay pasabot nimo sa conversion option katong katong kaning nga account, share warrants outstanding, share warrants options? Tama ba ang imong pasabot sa conversion option kani? Or ang paggamit sa term nga conversion option, conversion privilege? Sa term, sir, kung term siya, let's say convertible bonds tapos ang igamit kay share premium, conversion option, same lang na sa conversion privilege, basta convertible bonds iyang gigamit. Same rin na siya. Kaya ang concept sa convertible bonds, ang bonds atong i-convert into shares. Ang katong bonds payable issued with share warrants, nagapon ang bonds nag-exist. Nalay right si holder na gamiton ang warrants para iyang i-convert into shares, makapalit sa shares sa corporation. Okay, ang convertible, ang may tabo sa iya, it's either i-convert nimo, kung dili magay nimo i-convert, bayaran nato. Diba na siya, bayaran, kung dili man gani bayaran, gi-convert ni holder. Kapag ana siya, because mura sa convertible bonds. Kung sa term lang ang basihan, same lang ng conversion privilege o conversion option. So naa siya option to convert the bonds payable since it's a convertible bonds payable. Napay question? Wala tay ma-loss if dili gamiton ang share warrants because ang mag-decide ato si holder man kung iyang exercise or dili ang share warrants. Wala po loss may tabo sa ato as issuer because if exercise ni holder, mubayad bang gyapon siya. Bali ang share warrants lang naalay rights na pwede makapalit og shares si holder sa ato. Pwede nasa right na makapalit og shares sa ato. Bayaran man gyapon niya. So if dili gamiton ang share warrants, walay law. Kumbaga on our part as issuer, wala tayo i-recognize sa gain or loss. I-amortize pa ang premium, sir. Kano sa man i-amortize ang premium pag sa man Unsay pasabot sa i-amortize pa ang premium, sir? Yes. Yes, pag convertible bond siya, ang imong amortization sa, 'di ba, before you convert the bonds, dapat i-update nimo ang carrying amount. So therefore, para ma-update ang carrying amount, let's say for example, year 1 sa year 3 na nimo sa gi-convert, sa year 3 gi-convert ni holder. So from year 1, year 2, year 3, nag-amortize gyapon ta dira because again, at the time of the date of conversion, so kung on maturity, pwede wala na premium ma-record. Since paabot og maturity date, gi-convert siya, zero naman imong premium, di ba? Because at maturity date na-amortize na siya tanan. So, ang inyong buhaton ana is, before you convert the bonds, update first the carrying amount. Sir, saan pag-update sa carrying amount? So, siyempre, di ba, from time to time, dapat updated ang balance sa imong premium or discount. Therefore, nagyapoy amortization may tabo. So, if at maturity date, wala na premium balance. Why? Because, di ba, ang effective interest, yes, effective interest method, because di ba mo naging sa standard, use the effective interest method. Diba? So, not unless kung gi-specify gyud sa problem nga straight line or bonds outstanding method. Other questions? Napa? Okay, you can DM your questions dere sa ako if mao mo mag to everyone. Apa wala na. Sige, if you have no questions, let's answer sample problems under compound financial instrument. Okay, so this is a problem. So it's a katong share warrants with share warrants. Bonds payable with share warrants. Okay. Diba? With warrants. Okay, so here in this problem, we have 4 questions. Pila daw ang carrying amount of the bonds payable on the date of issuance? What amount should be recorded initially as discount or premium? Pilang equity component and pila ang credited to share premium if all of the share warrants are exercised. Okay, so let's answer this problem. So Moses Company issued 5 million face amount, 5-year bonds at 109. Baon sa ng 109? This is your si tawag ana. Si tawag ana ng 109. That is your Oy. Okay, that is your issue price with warrants, di ba? So that is the total issue price. Kumbaga that is the total issue price. Each 1,000 pesos bond was issued with 10 share warrants, each of which entitled the bondholder to purchase one share of 100 par value at 120. So immediately after issuance, the market value of each warrant was 5 pesos. So, sinitabuan so the stated interest rate on the bonds is 11%, payable annually every end of the year. Saan ang 11%? That is your nominal rate, diba? That is your nominal rate. However, the prevailing market rate of interest for similar bonds without warrants is 12%. So, 12% is your effective rate, diba? So, the present value, since there's no available market value or fair value of the bonds, diba? Unknown siya. So, sa itong buhaton, we need to compute the present value. So, makakompute ba tag present value? Makakompute ba tag present value, ane? Can we compute the present value of the bonds? Yes, because given ang nominal and effective rate. So before we proceed, di ba, we have the issue price of 109. Tapos each 1,000 bonds daw, di ba, we have 5 million pesos. Divide 1,000. So pila ka bonds tanan ni? That's 5,000 bonds. So each daw bonds, each 1,000 bonds was issued with 10 share warrants. So kada isa, naay share warrants nga 10. Therefore, that's 50,000 share warrants. Tapos each share warrant daw is entitled to purchase one share. Therefore, pila ka shares tanan ang pwede niya paliton? That's total of 50,000 shares. Pwede niya exercise. Okay, total of 50,000 shares. Tagpila ang par value? 100. Pila ang presyo sa shares? 120. Okay. So, based on the given, you have nominal rate of 11%, you have 12% effective rate, tapos given na po ang atong mga present values, di ba, of 1 and ordinary annuity. But normally, sa akong mga problem, di gid ako ni sa ihatag. Di ba? Because I want you to compute, di ba, the PV of 1 and PV of ordinary annuity of 1. Okay, so let's proceed, di ba? So first is, di ba, we have the issue price. How much is the issue price? 109. 9 to 109. Oh, 109. So that's 5 million times 109, pila na siya? That's 5 million times 1.09. 1.09 na siya ha. That's 5,450,000. Okay, first is, di ba, we need to compute the liability component. Okay, liability component. Given ba ang market value sa bonds? Given ba? Di ba, based sa problem, nabay gihatag ang market value. Naabay market value? The answer is wala, di ba? Unknown ang market value. Di ba? So, unknown ang market value. Since unknown ang market value, di ba, walay gihatag dira nga, the bonds without warrants or X warrant is 98. Kagaina na 98 gi-mention. Karon walay giingon pila. So, sa itong buhaton, so if the market value of the bonds is unknown, so we compute for the present value of the bonds. So, therefore, present value. So, ang gito pag-compute, so that's principal times PV of 1, then interest times PV of ordinary annuity of 1. Okay, so gini pag-compute, di ba? Swerte kay gihatag na sa problem ang PV of 1, PV of ordinary annuity. You have 0.57 and 3.60. But if ato siyang tinamba nun, di ba? PV of 1, that's 1 plus pila atong rate? Effective rate 12%. Tapos annually ang payments, 'di ba? Annually. So times 1.12% raised to negative pila ka years? 5-year bonds. Okay, so 5. So that's 1 plus 1.12 divide times negative 5 raised to negative 5. So the answer is 57. Di ba mo ni siya? This is how we compute 0.57. Kay base ng uban ha, dili pa kabalo mag-inani. Mag PV of 1, di ba? Kay normally problems ako hatag sa iyo dili ta mo hatagan ani. Di ba? I want you to compute the present value. So man magatag lang ko instruction nga 2 decimal places, 4 decimal places. But in this problem, 2 decimal places lang gigamit. Okay, PV of ordinary annuity, that's 1 minus 1 plus 12% raised to negative 5 divide 12%. Diba? 1.12 raised to negative 5, 1 minus divide 0.12. So that's 3.60. Oh, that's why kani 3.60 gyud sa ni pagkuha mao ni siya. Okay, so we have now the present values. Tapos pila atong principal? Our principal is our principal is 5 million. Ano to? Okay, our principal is 5 million. Pila tong PV of 1, that's 0.36 ba to? 0.57. Okay, 0.57. Okay, that's 0.57. Tapos atong interest, pila tong interest? Okay, interest is 5 million times the nominal rate of 11%. So that's 5 million times 11%, that's 550. Therefore, that's 550,000 times, pila to atong PVIF ordinary annuity of 1? 3.60. Tama ba? 3.60. Okay. So, pila na itong present value? So, that's 5 million times 0.57. That's 2,850,000. Then 550,000 times 3.60, that's 1,980,000. Therefore, pilay present value na to. That's 2,850. That's 4,830,000. Mao ba ning initial measurement na to sa atong bonds payable? Is this the initial measurement of our bonds payable? Yes or no? Okay, yes, di ba? This is the initial measurement of our bonds payable. Therefore, na-compute na nato. So, the liability component nato is 4,830,000. That's 4 million. Okay. So, we can now compute the equity component, the share warrants outstanding. So, that's 5,450. Residual amount for 830, that's 620,000. Okay, that's 620,000. Okay, so entry. What's the entry? Upon issuance. Diba? Issuance of the bonds payable with share warrants. So, debit, syempre cash. Diba? With debit cash equal to our issue price. How much is the issue price? 5,450,000. So, that's 5,450,000. Sa patong debit. Sige daw. Sir, sure ta sir, ang credit nato bonds payable. Tapos, credit share warrants outstanding. Debit unsa? Debit discount. Anong discount? Anong discount man? Anong discount? Naday discount? Okay, di ba? Since this is the present value, this is now the initial measurement of our liability, bonds payable. Tapos pilay face value, 5 million. Therefore, the initial measurement is lower than your face amount or face value, face amount. So therefore, there is discount. How much is the discount? That's 5 million minus 4,830. You have a discount of 170,000. That's why we debit discount on bonds payable. Then always your bonds payable account is recorded at face value. Face amount ka ni face value gina sa perme. Okay, so 5 million. Then pila imong share warrants outstanding based on the computation, you have 620,000. Okay, 620,000. This is the entry upon issuance. What if gi-exercise, di ba? Gi-exercise ni holder ang iyang share warrants. Gihurot niya tanan. Di ba? Kay ang assumption diri gihurot tanan, gi-exercise tanan if all of the share warrants are exercised. So pila gito i-balance atong share warrants? Pila ka share tanan ang pwede niya paliton? That's 50,000 shares. Pila ang par value? You have 100 tagpila upon exercise of the warrants 120. Okay, therefore kita as the issuer, so nag-issue ta og shares to the holder of the instrument. Okay, so our entry, since gigamit man niya yung share warrant, so we debit the share warrants outstanding Gihurot man, so 620,000. Tapos, nag-issue ta og share, that share capital, pila to ka shares tanan? 50,000 times the par value of 100. Okay, that is 5 million. Of course, di ba? So, nagdawat ta og cash from the holder because ipalit siya sa atong shares. So, pilay cash ani katong presyo sa shares times 120. Okay, so that's 50,000 times 120, that's 6 million. Therefore, pila ang atong share premium? Sobra man, di ba? Share premium excess sa par nimo. So atong balancing figure, share premium. So that's 6 million debit plus 620 minus 5 million. So you have share premium of 1,620,000. Okay, so we are done with the problem. Let's go back to the question. So what is the carrying amount of the bonds payable on the date of issuance? Pila to atong initial measurement at 4 million. Pila to na-compute? Okay, 4,830,000. Okay, kani 4,830,000. So that is letter B, 4,830,000. Next, what amount should be recorded initially as discount or premium on bonds payable? Pila to discount nato? So you have 170,000 discount. What is the equity component? 620. Then, pila daw ang na-credit sa share premium upon exercise? So you have 1,620,000. Diba? Based on our entry, okay, so it's very important that you know how to journalize the entry. Diba? In this transaction, because kung wala kayo mo kasabot, diba, na saan dito pag-compute, nakalimut ko sa formula, but you know the journal entry, basta mo ni ang debit, mo ni ang credit, dako yung chance na matama inyong answer. Okay, so mo na yung answer. So this is for the bonds payable issued with share warrants. Next, let's proceed with next problem. This is convertible bonds. Okay, so Clay Company had 600,000 convertible 8% bonds payable outstanding on June 30. So as of June 30, naasay 600,000 convertible bonds. Each 1,000 bond was convertible into 10 ordinary shares of 50 par value. Therefore, naasay 600,000 pesos nga bonds divide 1,000. So pwede niya naasiyay divide 1,000. Nasa 600 ka bonds na tig 1,000, pwede daw siya makapalit or pwede niya ma-convert into shares na 10 ordinary shares per 1,000. So that's 600 times 10. So pila tanan iyang pwede ma-convert, pila ka shares pwede niya ma-convert ang bond. So that's 6,000 shares. Diba? In this case, it's a convertible. Ang bonds pwede ma-convert into 6,000 shares. Okay, kagaina, it's bonds payable with share warrants. Pwede mupalit si holder og share, gamiton niya ang share warrants, but naragyapon ang liability. Naragyapon ang bonds payable. Bayaran gyapon nato siya. Nipalit lang siya sa ato. So in this case, since it's a convertible, it's either i-convert ni holder or magpabayad si holder. Mo na mahitabo ani. Okay, so pwede niya ma-convert ang bonds into total of 6,000 shares at 50 par value. On July 1, the interest was paid to bondholders and the bonds were converted into ordinary shares which had a fair value of 75 pesos per share. Okay, the unamortized premium on these bonds was 12,000. So therefore, there is premium upon So updated na siya upon conversion at the date of conversion na ay nabilin nga premium and amortized nga 12,000 and no equity component was recognized when the bonds were originally issued. Therefore, at the time of issuance, wala na identify nga equity component. Therefore, wala tayo share premium on conversion privilege. Okay, there's no balance of share premium conversion privilege. So, what is the increase in share premium as a result of the bond conversion? So, atong buhaton ani, so we need first to compute the total consideration. Diba? So, pila ang total consideration nato? So, you have the bonds payable of 600,000. Tapos, you have the unamortized premium of 12,000. Therefore, wala tayo conversion privilege, di ba? So, this is now our total consideration. Pila ganito ka shares pwede ma-convert? So, 6,000 shares at 50 par. So, you have the share capital that 6,000 times 50 par. That's 300,000. Therefore, the balance, kinsa nato i-record kang share premium. So, that's 312,000. Sir, let's say entry ana, sir. So, our entry, since there's a conversion of the bonds, tanggalon na nato ang bonds. Pulihan na itong share. So, bonds payable, premium, 600,000. This is 600,000. Pila ang premium? 12,000. Share capital, 300,000. Share premium, okay, 312,000. So that's the journal entry. Since there's no equity component was recognized when the bonds were originally issued. Therefore, pila answer. Okay, how much is the answer? What is the increase in share premium as a result of the bond conversion? So, klaro na kayo, that's 312,000. So, the answer is letter A, 312,000. Oh, kani siya, mo ni gi-convert, di ba? Gi-convert ang bonds. Next problem, wala gi-convert ang bonds, gibayaran. Di ba? The bonds were not converted and instead the entity paid off the convertible bond holders as maturity. So gibayaran nato at maturity date. Okay, let's read first the problem. Young company issued 5,000 convertible bonds at the beginning of the current year. The bonds had a 4-year term with a stated interest rate of 6% and were issued at par with a faced amount of 1,000 pesos per bond. Interest is payable annually on December 31. Each bond is convertible into 50 ordinary share with par value of 10. The effective rate of this bond, non-convertible bond is 9% because wala sa gi-convert. Di ba? Wala sa gi-convert. At the issuance date, the amount of 485,000 was credited to share premium from conversion privilege. Therefore, the equity component daw at the date of issuance is 485,000. Okay, question. How much is the issue price? How much is the issue price based on the problem? Kanila pong approach sa problem ani. Sige, how much is the issue price? How much, what do you think? Diba? Pila ang issue price niya? Oy, pila. Sige, basaha sa ang problem balik. Pilang issue price ani. Although ang question is dili na gid ta necessary pa to mo compute, but let's for procedure, for accounting procedure, di ba, how do we account for this transaction, to lang sang agian. Pila? So, ni nag-answer dire, 5 million. How about the others? Isa lang akong estudyante. Duha ra? Upat? Out of 60? Okay, the answer is 5 million, di ba? So, gingon dire, the bonds had a 4-year term with a stated interest and were issued at par. When we see at par, at face value. Okay, pag may nag-at par ha, at face value. Pila ang face value nato? 5 million. That's 5,000 convertible bonds times 1,000 pesos per bond. So therefore, the issue price is 5 million. Question, pila atong liability component ani? Pila atong liability component? Unsa atong buhaton? Naabay market value given? Di ba? Wala yung market value given. So, unknown ang market value. Therefore, pag present value ta, di ba? We have 6% nominal interest rate and you have 9% effective rate. So, unsa itong buhaton? Question, pila ang atong liability component? Sige daw, be. How much is the liability component? Guess lang, di ba? 485K, 4515, liability component. So, di ba, unknown ang market value, di ba? Ingon, if the market value is unknown, we need to compute the present value. Since natay nominal na 6% and you also have effective rate of 9%, we have the term na 4 years. So, we need to compute the present value. Okay, actually, pwede mo compute sa present value, but tanawa ang problem. Unsay gihatag sa problem? At issuance date, the amount daw of 485 was credited to the share premium conversion privilege. Si pasabot ani, the 485,000 is already your equity component. Therefore, sa atong formula dire, di ba, minus liability, this is now the equity component. So, nanatay 485,000 equity component sa atong buhaton, work back ta. Pila ang liability component nato? Di ba? Minus man na dira. So, that's 485 minus 5 million. So, the liability component is 4,515,000. Sir, kung mag-prepare mi atong PV, sir, actually, dili sa mo total og 4,515. Wag yan, total is 4,513 lang ata or 14. So, since sa problem, so mani siya, so basahan ninyo ang problem on say given. Ayaw na lisod disura, inyo ko galingon, since di ba gihatag naman ang equity component. So, work back na lang ta. Kaysa kani, di pa maong amount, effort magitag compute og PV of 1, PV of ordinary annuity of 1. Okay, actually it's good if nag-compute mo, at least ma-compare, 'di ba? Pero since gihatag na ning 485, okay, actually it's no need to compute for the PV. So automatic, the liability component is 45 515. Okay, what's the entry upon issuance? Diba? So, cash. Siyempre, at par ang issue price nato. Sa patong debit. Discount. Anong na-discount? Because again, this is now the initial measurement of our bonds. 4515 and the face value is 5 million. Therefore, the initial measurement is lower compared to your face amount. Therefore, there is discount. On bonds payable, the amount is 485. Then, bonds payable at face value 5 million. Then, you have your share premium conversion privilege of 485. Diba? Gibalik-balik lang amount niya. That's the entry. Gibayaran ba? Or gi-convert ba ang bonds? So, unsay gibuhat sa holder, gi-convert or nagpabayad siya? Unsay gibuhat nato, gi-convert ba nato or gibayaran nato? Okay, bayad, di ba? Because the bonds were not converted and instead the entity paid off the convertible bondholders as maturity. Unsay entry nato ani? At maturity date, pagbayad. Siyempre sir, gibayaran, bonds payable. Since its maturity date, that's equal to the face value of 5 million plus the interest expense. Because diba, annually ta magbayad, interest expense. Pila interest expense ana? That's 5 million times the nominal rate of 6%. So that's 5 million times 0.6%, that's 300,000. So, monita na natong gibayaran at maturity date. 5,300,000. Okay, this is the entry. 5,300,000. Question. What amount should be recorded as gain or loss on the full payment of the convertible bonds at maturity? Nabatay gain or loss? Nabatay gain or loss? Okay, wala, di ba? Because again, if you pay the liability, the convertible bonds at maturity date, there's no gain or loss. There, di ba? Wala man tayo gain or loss dire. Di ba? So, there's no gain or loss. Therefore, the answer is 0. Sulat lang. 0 ang answer. Okay, so last problem for compound financial instrument. Kani, still convertible bonds, but this time, wala gi-convert, gibayaran siya before maturity. So, gibayaran sa before maturity. Okay. So, we have 3 questions here. Pila daw ang gain or loss? So, kung sa question dire, gain or loss on extinguishment, walay 0. So, naagi gain or loss, di ba? So, nanapod ba? Ato lang basahon ang problem. Pero sir, imong quiz kay fill in the blanks man. Kana siya, di ba? Sige. Dayon ta. So, here, on December 31, 2020, this is the balance. Showed the following balances. You have bonds, discount, you have the share premium from original issuance, and you have the share premium or the equity component. Okay. The interest is payable annually every December 31. The convertible bonds are not converted but fully paid on December 31, 2020. Okay, on December 31, 2020 siya. So, gibayaran siya at the end of December 31, 2020. So, kung tanaw ninyo, assumption sa problem is dili pa at date of maturity. Okay, wala pa at date of maturity because, di ba, naapay balance sa discount. Di ba? At the end of, mo yung timailhan. Because pag may kag maturity date, zero na ang balance because fully amortized na imong discount and premium. Okay. Diba? Fully amortized na imong discount of premium. In this problem, gibayaran on December 31, 2020. Question, maturity date na ba ng December 31, 2020? The answer is no. Why? Because naapay na bilin nga discount on bonds payable. Wala pa na amortized tanan. Therefore, gibayaran nato before its maturity date. Before its maturity date. Okay, on such date, the quoted price of the convertible bonds with the conversion option, so ang price daw sa bonds plus the conversion option or the equity component is 105, which is the payment to the bondholders plus the interest. Siyempre, wala man gi-convert ni bondholders ni holder, atong gibuhat, bayaran nato siya. Pila atong gibayad? 105. Okay, that's the quoted price. However, the quoted price of the bonds without the conversion privilege is 95 pesos lang. So, kung naay conversion privilege, 105. Kung walay conversion privilege, 95 lang. Siyempre, we only compute gain or loss on extinguishment based on the bonds payable alone. Walay labot ang equity component. So, sa itong buhaton, so let's say, pilagay itong quoted price, including the conversion privilege. So, you have, that's 5. Pila ang face value ani? That's 4 million. Okay, that's 4 million. This is with conversion privilege. That's 5 million times 1.05. Okay, that's 5 million 250. While pila tong without conversion privilege, that's 5 million times 0.95. That's 4,750. Anong 5 million akong igamit? This should be 4 million. Diba 4 million ra to? So mali na eh. That's 4 million. Then, pag walay conversion privilege, that's 3,800,000. Therefore, pila day ang share sa equity nimo or sa share premium with conversion privilege nimo. So, ang balance ana, di ba, that is allocated to the equity. So, 4,2 minus 3,8, you have 400. Okay, so since nagbayad ka before maturity, portion of the conversion privilege apil pud siya sa kaning 400,000. Portion lang because diba dili sa at maturity date. Okay, so unsay sunod ato buhaton? So we need to compute pila ang carrying amount of the bonds payable. So let's say on December 31, 2020, diba, you have face value of bonds payable. You have 4 million. You have the discount of 500,000. That's the carrying amount during payment, diba? That's 3,500,000. at the time of full payment, 3,500,000. Tapos, pila gani ang atong gibayad ani? At pila atong total gibayad ani? Okay, so nagbayad ta og 3,800,000. 'Di ba? Ang gibayaran nato sa atong liability is 3,800,000. 'Di ba? Mo na itong gibayad sa liability. Pila ra gani atong carrying amount sa atong liability? We only have 3,500,000. Therefore, kung atong quoted price without conversion privilege of 3,800,000, ginan sa ta lugi. Ginan sa ta lugi. Okay, di ba? 3,500,000 ra atong carrying amount pero atong gibayad 3,800,000. Therefore, lugi ta og 300,000. Loss on extinguishment. 300,000. Okay, upon payment, lugi ta og 300,000. So, unsa tong journal entry upon payment? Unsa tong journal entry upon payment? Okay, so atong entry upon payment, since gibayaran man nato bonds payable 4 million, debit tag share premium conversion privilege katong balance na 400,000 ba ato to sang i-account. Okay, because part of the sa atong gibayaran, is part sa equity nga 400,000. So that's 400,000. Then we record the loss of 300,000. You have the discount. Ito tong discount, 500,000. You have the cash. Pila tong gibayad tanan as a whole? 4,200,000. Okay, 4,200,000. So that's the entry upon payment, full payment of the bonds. Okay, so since question number 1, what is the carrying amount of the bonds payable on December 31, 2020? The answer is kani siya. 3,500,000, letter C. What is the gain or loss from extinguishment of bonds? Diba? 300,000 loss. Okay, sir, walay appeal ang interest dira, sir, nga bayaran. So actually, it's included. Basta ingon dire, 100 which is payment to the bondholders plus the interest. The quoted price of the convertible bonds with conversion option is 105, which is the payment to bondholders, okay, plus the interest. So, for number 3, what is the total payment to bondholders on December 31, 2020? Pili answer ani. So, we need to add the interest pa, di ba? Kay total bayaran man. So, since atong entry diri wala pa labot interest, so we need to add interest expense. cash. Do we compute the interest expense? That's 4 million times the 6% interest rate. That's 240. Therefore, pila tanan atong gibayad sa bondholders. Well, the question is, total payment to the bondholders on December 31, 2020. So that's 4,200,000 plus 240. That's 4,200,000 plus 240. That's 4,440,000. Okay, so that's the answer for the problem. Question so far. So we are done with compound financial instrument. Questions. Pangutana, naipangutana. Walay questions. Sure ha, walay pangutana ha. Grabe, type 1 kung nakasabot. Away nakasabot di ay. Sa man. Hello, napay tao. Oy. Sige daw, type 1 kung nakasabot. Hello, walay nakasabot. 0.5. PV of 1. 0.5 nagloading sir. Gamay sir. Sige, ahaman nagloading. Oh, ako na i-post ang recorded video. 0.5. Anong 0.5 man? Sige. Aha, ang kulang nga 0.5. PV of 1 sa 6% semi-annually. Ano ni ang computation? Ano pasabot ana sa ulis? PV of 1 sa... Sige. Bantay mo pag semi-annually, bantayin ninyo ang rate dapat divide 2 tapos ang n times 2. Inyong quiz kay naunsa man to inyong quiz last time. Sa notes payable, di na lang ko mag-discuss karon og notes payable because ang notes payable same raman sa bonds payable, naragyapon ang effective interest method. Nagloading pass convertible sir. Medyo sa duha ka example sa compound financial instrument, ang convertible ang medyo makaloading. Yung makaloading ang convertible. So if dili again, if di kayo magets ang concept biskan kapila na kala may mga formulas given, so you can familiarize the formulas. If dili gyud wala gyud na nasabtan gyud og tarong. Basta kaya concept sa convertible, ang bonds, it's either i-convert siya or bayaran ni issuer. Diba? So, dili pwedeng masabay siya na nag-convert at the same time gibayaran. So, dili inana ang convertible bonds. Dili pareha sa bonds issued with share warrants, bali naagi liability, pwede po na equity. So, pwede na i-convert ni holder ang iyang share warrants, pwede po dili. Pero regardless gi-convert or wala ang share warrants, liable gyapon si issuer to pay for the liability. Okay, regardless kung gi-convert or wala ang share warrants. Gi-exercise ang share warrants. But sa convertible bonds, ang pwede mahitabo, it's either gi-convert into shares or gibayaran ang liability. So, yun na mahitabo. So, dili pwede na kung na-convert into shares na ang bonds, bayaran paghapon nimo. Dili na, mo na to ang kuan. Kumbaga, gi-convert na nimo into shares. Sir, if ang payment for interest kay July 1 o December 31, tapos ang question kay interest expense for December 31, tanan ba interest expense for 2020 or sa December 31 ra? So ang question ana, let's say semi-annual, di ba? So okay, semi-annual, the payment is July 1 and December 31. Okay, so since semi-annual siya, so July 1 ang interest payment o December 31. Ang question is, sir, kung ang pangutana, how much is that interest expense for 2020? The answer is, ang whole interest incurred gikan January 1 to December 31. So again, gikan January because whole year ang pangutana, interest expense whole year. So gikan January 1 to December 31. Let's say for example, di ba, interest payment July 1, December 31. Let's say tag 50,000. Okay, so ako ang question is pilang interest expense on 2020, di ba kani siya, that's gikan January since semi-annual to July 1, 2020. Kani po gikan July, this is June. This gikan July to December. Since covered man gyapon sila for the whole 2020, so kaning duha imong interest expense for 2020. Ang lisod ani is kaning inani. Let's say April 1. After 6 months, April, May, June, July, August, September. Tapos September 1. Diba? Inana ang tawag ani. Ang interest payments nimo, interest dates nimo. Let's say, good for 6 months, 50,000 ang interest ng imong gibayaran. Tapos ni sa atong klarohon kay para medyo kutip kuan po na siya, misleading po na mga pwede po makuan ani nga question. So ang interest payments nato, let's say every semi-annual April 1, every April 1 and September 1. Di ba kay 6 months, April, May, June, July, August, September. Dapat October 1 ni. September, October. Mali, di sa 6 months. Okay, October 1. Let's say every 6 months, 50,000 interest imong gibayaran. 60,000 na lang para dali na to i-divide. 10,000 per month. So that's 60,000. Nagbayad ka ha, interest date. So let's say this is 2020. Di paabot og 2021, magsugod na pagbayad na pug ka April 1, October 1, 60,000. Ang question karon, pila ang imong interest expense for 2020? Kani siya kay same raman amount, dali ra sa i-compute. But what if dili same amount, naka amortization table mo? Okay, so inani niyo buhaton sa 2020. Di ba kaning 2020 nimo, kanang April 1 nimo gikan na sa October 2019 to April 1, 2020, di ba? 6 months. Gikan sa 2019 October ang imong gibayaran. So imong kaon aning 60,000 is katulad kang 2020. So that's January, February, March, 3 months ra. So kani divide 6 months because 6 months lang ni sa times 3 months. Mora na imong kaon kang 2020. So let's say pila man na. So maora man gyapon answer pero for illustration purposes. So that's 30,000. Tapos sa October 1 nimo di ba gikan ni kang April 1 to October 1. April 1 to October 1, that's 6 months. So kuhaon nimo tanan ang 60,000 because covered sa 2020. How about ang kaning April 1 nimo, di ba gikan ni kang October 2020 to April 1, 2021. So naapay 3 months sa 60,000 sa 2020 nga imong gibayaran na incurred last 2020. So times sa pagkadirect times 3 months divide 6. So that's 30,000. Actually, the answer is still 120,000 because the amounts are equal. Pero what if dili sa equal? So may yung buhaton. Di ba? When we say interest expense, we are referring to the interest already incurred regardless when it is paid. So incurred nga interest, di ba? When we say interest expense, interest incurred regardless when it is paid. So ang answer ana katong tanan interest na incur for 2020. So kung kani ang imong question, July 1 o December 31 interest payment, covered gyapon to tanan imong gibayaran sa July 1 o December 31 because sulod sa 2020, na incur sa 2020. But if this is the case sa problem, kailangan niyo sa i-allocate pila ka months lang ang actually incurred for 2020 na inyong gibayaran on the certain interest payment dates. Clear na ba to? Okay, sige. Another question. Sir, kaning sa problem 711, naalagi non-convertible. Unsa meaning ana, sir? Problem sa to, 711. Mo ba ni kagay na? Sa libro na, no? Sige, check na ko. At the beginning of current year, case company issued 5 million 12% non-convertible bond. Dili sa convertible bonds. Instead, it's a bonds payable issued with share warrants. Lahi siya ha, lahi na si, di ba duha ka klase sa compound financial instrument. It's either bonds payable issued with share warrants or convertible bonds. So, siyempre, dili sa non-convertible siya. Therefore, ang bonds payable na issued with share warrants. Diba gingon dira, detachable share warrants was issued with detachable share warrants. So, dili applicable ang this is not a convertible bonds payable. Instead, this is a bonds payable issued with share warrants. Sige, napa? Okay, again, dili na ko explain ang bond ang notes payable because balik ra na siya Same lang na siya sa kanang competition sa bonds. Nalay mas kanig to katong about sa credit risk na part. So it's understandable raman siya. Napay question? Pila na lang itong kulang na topics for midterm because, di ba, exam na next week?